Welcome to Larking Gowen Insights, accountancy and business advice for all, a series that gives you bite-sized tips and guidance on tax, funding, legislation, reforms and much more. With case studies, business advisory and sector specials and even interviews, our team of experts are committed to helping you navigate the world of accounting and finance, with a variety of presenters from across our specialisms. So, let's get on with today's show.
Welcome everybody to the emergency FUNDcast on the proposed Charity SORP 2026 consultation. I'm Emma Hayward and as usual I'm joined by Giles Kerkham. Together we're going to explore the proposed changes in the consultation and how this will affect charities and what feedback might be provided in consultation. Hi Giles.
Hello Emma.
Okay, so let's start by setting the scene. Can you give us an overview of timescales on this new Charity SORP? How long have we been waiting? How long the consultation is? And when will we actually get to see a final set of changes?
We've pretty much been waiting since the last major SORP revision in 2014, so more than 10 years now. The revision process was started by the SORP committee sort of back in 1819. And they've been looking at themes since then. There is another major reason why they need change, which is a new accounting standard affecting everyone producing accruals-based accounts, which is FRS 102. And that has been issued, and that will be in place for accounting periods starting January 2026, so next year. So that forces this SORP to integrate those changes and all the other ones they've come across. So the race is on. There was an exposure draft of the new SORP issued at the end of March. That's all in consultation with feedback asked for before 20th of June, so 20th of June 2025.
Okay, an important date.
Then, when they've got that feedback, they've got several weeks to look at it, to update the SORP, make their decisions, then get it approved by the Financial Reporting Council, and then to get it out for us, which they say will happen in the autumn.
Okay.
What does autumn mean? It might mean December, but absolutely it can't run into the new year. So we know it's going to happen, even if we don't quite know what's going to be in it.
Okay, yeah. I mean, I have to say I've had a look at it, and there are lots and lots of changes in the new document. What I appreciate you refer to FRS 102. What are they trying to change other than obviously the impact of FRS 102? What are the key themes I think we need to consider?
I think they're starting from trying to use to develop reporting to advance public trust. That's what the Charity Commission would say, advancing public trust in charities. So they're looking for better reporting that helps stakeholders, people who read charity accounts, understand relevant things in those accounts. So they're looking for a better SORP that's clearer, that removes some of the confusing parts and a few errors. They also want a SORP that works better for small charities. So it's more proportionate to compile accounts for small charities. In some cases, that means easier to interpret the rules. In other cases, it's actually saying a bit more, and we'll come on to that. So some places where they need to be saying a bit more for people to understand them. The SORP committee, they're saying, well, where they're asking for a bit more, they're saying, well, we don't think this is onerous, we don't think this is a burden, because we think this is information that they will readily have at hand. As part of the consultation, we may or may not agree about that. There's also, as well as more proportionate, better charity type reporting, and the FRS 102 bits, there's also some extra sections on sustainability, so about environmental, social impact. That creeps in, and we see that in various places in there.
Okay, so let's probably dive into the possible changes. What are those sort of headline key areas that are going to be addressed?
Right. So first of all, the levels at which there are different reporting requirements, those have changed. We'll go into that in more detail. Trustees report. There's lots of changes in the trustees report. The statement of financial activities, which is the income and expenditure account for a charity. There's more guidance on how to present that, particularly for smaller charities. There's guidance on recognition of income. That includes guidance in specific charity type areas such as legacy income, but also what's what we'll talk about the 5-stage model that comes out of FRS 102, which is complicated. It's complicated enough for accountants to have gone on several courses and not always feel that they've got the detail, they worked out what's going on. Lease accounting, there's a big change there, which will include lots of work for people. There's changes in the cash flows, total return accounting, social investment, and in the related party sections. And each section has specific, in the consultation, each
Yep.
section has specific questions designed to get feedback.
Okay. You mentioned tiering and the split between larger and smaller charities. We already have the £500,000 broad income level tier. So what's changing?
Yeah, as you say, we have a threshold now at 500,000 income. Reporting is split into larger charities and smaller charities, depending on where their income sits in relation to that threshold.
Yeah.
And that sets out the sort of mostly the details in the trustees report, but also the type of reporting of income and expenditure. That split, smaller, larger, is split into 3 levels, which are called tiers.
Yep.
TIERS. Tiers 1, 2, and 3, which split. And the bottom tier, tier 1, is income below 500,000. Tier 2 is income above that, up to 15 million income, and then tier 3 above 15 million. If you know your Companies Act thresholds, you will know that 15 million is the income level which splits small companies from medium companies.
But that £500,000 split hasn't changed. As you say, we've had some significant inflation since those levels were set. So is that something that has been ignored?
I don't know if it's been ignored. They've retained that level. Remember, a few years ago, the smaller, larger split, when the audit threshold went up from 500,000 to 1 million, that reporting threshold went up to 1 million several years ago, but then quite soon it was brought back down to 500,000 because it was felt that 1 million was too large, too high for that level.
Okay.
They're proposing the same level for the 500 for the tier 1 tier 2 split, ignoring inflation. There is a consultation on thresholds in the charity world out
Yes.
now, and that's consulting on all sorts of thresholds, which include the charity registration threshold, the independent exam threshold, the audit threshold, the annual return threshold, and for all of those they give options of standstill, inflationary, which is somewhere up to 50%, and somewhere in the middle. So yeah, I don't know that they're ignoring inflation, but they're certainly saying we don't want it to go up.
Okay. Yeah.
But we've got a consultation. We have an opportunity to feedback on that.
Yeah, I appreciate that, and that's worth noting. You also mentioned the trustees report and really where the big changes are going to be in respect of that. I think, we all know that the annual report is one of the trustees' opportunities to really feedback on to stakeholders on what the charity has achieved and its way forward. So what are the changes you mentioned earlier? All sorts of things, sustainability amongst them. What are those big changes?
Well, one thing they're saying is they're pushing for more trustee participation in developing the narrative report. It is an area that trustees can participate and influence in. Quite often it is written by executive, but there isn't the opportunity there. So there is more guidance and explanation that I think is helpful for those drafting the report. One area that there is enhanced reporting on is impact reporting, which was highlighted beforehand. We were expecting this. Impact reporting is already in the SORP.
Right.
It's until now it's really been encouraged, so rather than being required. So it's at different levels. It's a should. You should do this, and you may do this. There's already the mandatory reporting of achievements, but then to expand from that, you may or you should say more about it. So there is now new mandatory reporting of how the charities work makes a difference, and that's in tier 1. So that
Oh,
is a
okay.
change. That is more
Okay.
reporting. That is now first time mandatory reporting of impact at all levels, and indeed also mandatory reporting of long-term impact on beneficiaries and individuals and society in tiers 2 and 3. So impact
Right.
reporting, it really is mandatory as opposed to encouraged.
Okay.
Secondly, sustainability reporting has a big new section all of its own. It's a must for tier 3, so the very largest charities, the charities above 15 million. It's a recommendation for tiers 1 and 2. For tiers 1 and 2, they're encouraged to explain their response to and management of environmental, governmental, and societal matters. For tier 3, as I said, this reporting is mandatory. There's also sort of a rearrangement, really, of the reporting on volunteers, because as before, counts don't include a value of volunteers because you
Right.
just can't estimate what it's worth. It's not counted for as a donation expenditure, but there's a new requirement to say more about the scale and the nature of volunteer activities. And this, as I said, this is a requirement, and this is all tiers. So that's new
Right.
reporting.
Yeah,
They
certainly.
say this isn't onerous. You should already know this. This was only required previously for larger charities. Reserves, as we've always had to have a reserves policy in the trustee report. Tier 1 charities are going to have to say more about their reserves policy. They're going to be explaining the steps to bring reserves into line with target,
Right.
along with more explanation around designated funds. Those were requirements of larger charities previously. So there's a challenge there. There's a challenge, I think, for trustees really to sort of really understand their policies and those nuances in order to make those extra descriptions. There are extra explanations in the SORP of what makes up reserves. I think there is a gap, there is a knowledge gap there still. To help the accounts reader, I mean, sometimes it's really not clear. You can read the number in the trustees report on the reserves, and the reserves will say this is the reserves number, and you look at the accounts, and it may not be readily obvious how the two fit together. So if in that case, there will need to be a note to reconcile the accounts figure to the reserves policy. Again, this will help understanding of everyone. I think that will help drafting. Um, there's also some useful clearing out of some largely irrelevant clutter from the reserves policy, the bits that made you list out um, restricted funds were X, tangible fixed asset funds were Y. That's kind of irrelevant, so that's going.
Okay.
There's also, I mean, I think also on that financial reporting section, there's if you have got legacy income, and if some of that legacy income you've accrued for but not yet received, readers of the accounts ought really to know that that's not really available as part of reserves. So you have to explain the impact of those timing differences, and that's tier 2 and tier 3 charities requirements. Um, I think one more thing that I'll mention on the trustees report, which is about plans for the future. Until now, larger charities have to include a section on plans for the future. Going forward, the proposal is that all tiers will have to have a session describing plans for the future. SORP
Okay.
committees say that trustees already have to consider the future, not least when they're assessing going concern, so this isn't a significant new burden.
No.
Um, Small charities might disagree, and we might say so in our
Well,
consultation response.
absolutely. I mean, it sounds certainly additional work or input and time will be needed for certainly tier 1 charities, but do you think overall it will mean more thinking and more resources put into thinking and writing the report across the board?
I think tier 1 charities, there's more to say. There's more careful reporting required of tier 1 charities. I think particularly in the year of adoption, there will need to be thought about what extra is needed. I think it won't necessarily mean longer reports.
Okay, that's interesting.
But you will talk. Charities will talk to their advisors about this, who will help guide them.
Okay, so let's move on to the statement of financial activity. What are the changes proposed there?
The proposed changes for smaller charities, but really it's extra guidance. We've always, for smaller charities until now, we have an option. They can either sort of set out their expenses and income, but their expenses in particular on an activity basis, i.e., by type of activity, or on a natural basis. So rent, rates, and phone. But the example SORP was always given on the activity basis, which is what large charities are reporting on. So charitable activities, fundraising, etc. And in a number of cases, this ended up with a mishmash of people trying to report natural basis, but using the activity basis headings, and sort of there was some sort of just words that didn't describe what they were doing. They have now, in the new SORP, they're proposing to include examples of both types, which I think is really helpful, and I think we will just get with this will lead to better reporting.
You mentioned earlier about the changes to FRS 102 in respect of revenue accounting and lease accounting. And I suppose, how have these been treated in respect of the Charity SORP? I know that there isn't an awful lot of discretion when it comes to the Charity SORP, but the rules typically have been written with commercial accounting in mind, and examples often are for commercial accounts. So how do you think charities will be able to encompass and adopt the revenue recognition changes that are being suggested?
I think what I'd say, first of all, the revenue recognition, there's a new 5-step model. Accountants will be aware of this. It's brought in from international accounting standards. Commercial accountants are sort of trying to get their head around how much does this affect. It's a different, in terms of actual what's it going to affect in the accounts. It's a different way of looking at revenue, at income, at measurement. It requires us to go through a bunch of steps. We don't quite know. No. It requires us to go through a bunch of steps. But as you say, charity income is different from commercial income. So, and this applies specifically to contract income.
Right.
And not all charity income is contract income, of course. They have grant income and donations income. So, usefully, the new section with lots of pages on the 5-step model is kept separate from the section on non-exchange transactions, i.e. grants and donations. So we don't mess that bit up.
Well, that's good to hear.
Yeah. Remember, I think in terms of working out what this affects, remember, it's about income from customers.
Yep.
And the types of income it's going to affect is ones where you have a sort of a contract with a bundle of different services that are being delivered over time. Charities are going to need to spend time considering how the new model affects them, particularly in year 1 of adoption. For many, there may not be a significant change in practice in terms of what the accounts look like, but there is specific guidance on charity types of income, including membership subscriptions and royalties, which could be affected, not in all cases, because you may already be accounting in the new way, but there could be changes.
Okay.
Yeah, so I think all charities are going to have to do some work on this to work out what's affected and what isn't.
It sounds that way, but we've talked about grant income and so forth, but what we haven't touched on is legacies. Of course, a very important area for many charities. Is there extra guidance on that, and how helpful is that?
Well, I think the problem with legacies is you become aware of legacies in different stages, and then
Yeah.
the money comes in different stages. So the issue is when to recognise. There is no real change in the revenue recognition principles set out in the SORP.
Okay.
But there has been criticism of the SORP that there's variation in practice. Do you wait for probate? If you've had probate, you might not even recognise then. Why is this? So the good point, what the SORP does is it includes a couple of some practical factors to take into account, other than just is receipt probable, other than the sort of three key tests. So new fact. So it actually mentions valuations and disputes. These might delay recognition because you can no longer, if you've got a dispute, you might assess that receipt is no longer probable. It also
Right.
mentions notification services such as SME and Forward, and I think that's helpful. Another thing it does, it acknowledges that if you don't include the income in the accounts, you might also be disclosing, and that might be disclosing something that passes the test to make it a contingent asset, which are
Yeah.
quite specific in accounting standards, or simply disclosing. You might just say we might get this.
Yeah.
If there's
Okay.
a legacy that's big and it's a possibility, just say so. Don't worry about whether it passes the contingent asset test.
Because that's sort of useful information for readers to
Yeah,
have, certainly within the context of going concern, as well as lots of other things.
and there is discussion in the SORP about portfolio treatment, where if you've got multiple legacies, you can use an averaging approach, and that's the same as before. Although I think that there is a clarification that there's a materiality condition, or you can do this if substantially it doesn't materially change the outcome.
So I think certainly lots to think about in terms of revenue recognition, and it sounds like some potentially practical additional guidance which would be useful. But also, I think we're all well aware of the changes to leases. What do you think is going to happen in respect of leases? And
Well, leases is the area which is going to cause the most work,
yeah,
fundamentally, in charity
yeah,
accounts and non-charity accounts. And the change is that all leases, finance leases, operating leases will come onto balance sheet. So there will be a right to use asset, and there'll be a matching liability recognised at the start of the lease. There's lots of detail on this in the SORP, but charities often have leases that are different in type from commercial companies, and the SORP discusses these, and it gives examples. So it gives example for peppercorn leases,
yeah.
and charities often might get leases which the SORP calls social donation leases, and it gives example on these. This is the area where I think charities are going to need to do preparation and are going to need to consider what they have in leases, and that's where the benefit of doing work ahead and talking with your advisors will be. What we might ask the SORP to do is to help out the smaller charities, and in doing so, yeah, it goes some way in sort of setting out the exemptions on smaller leases that apply to in the FRS 102. It can't give any exemption for a smaller charity per se.
That's leases and revenue. Just going through the sort of standard accounts. The other matter is cash flows, and certainly that is something that is going to change. In what way, I suppose?
Yeah. Well, currently, larger charities over 500,000 income, have to include a cash flow. Whereas in the commercial accounting, you only need a cash flow if you're a non-small company, i.e. broadly at 15 million income.
Yeah.
So the SORP helpfully says, no, you don't need cash flow unless you're tier 3. So unless your income is more than 15 million, or unless the Companies Act requires it, where you might be non-small for another reason. But broadly,
Yeah.
it's going to take the cash flow out of a lot of charity accounts, which I think is proportionate.
Yes, it certainly sounds that way. But it also refers to total return on and social investment, something that probably is worth exploring further in terms of what that is and how that is affected.
This is doing what it has to do, because they're fairly niche. There are some amendments in the Charities Act 2022, which it needs to be. So there's simpler terminology now used in the guidance. Really, it's trying to make it a bit simpler, the reporting a bit simpler and a bit more accessible.
Just a couple of final things, Giles. So, what are your overall thoughts on the direction of the SORP consultation?
Well, first thing, it's quite long. It's more than 300 pages. It's got longer. It's not aimed. It says it doesn't aim for longer accounts. It says it aims to help charities report smarter and not necessarily longer. I think the draft is sort of largely successful in that. I wish it was a bit shorter. We are continuing to review in detail.
Yes.
We're picking up in our review. We're reviewing because we're feeding back into the consultation, as well as working out how to advise our clients. But we're picking up on drafting points, so points which they just haven't still got quite right. Some of these were in the old SORP and some of them are new, as well as on points of principle. And I'm continuing to have conversations in the sector to help compile our response. And just we would look forward to hearing from charities if we haven't had those conversations with you.
I think practically, charities need to be considering what they need to do next. And what advice would you give in respect of that?
You've got a draft SORP. It's available. There's commentary out. Read it. Familiarize yourself with the proposals, because I don't think the outcome is going to be a million miles away from this. And to be looking ahead, you're already, if you're watching this, you're already on that journey. I think where would you need to do to prepare to adopt? Well, the big areas around leases potentially, isn't it? So understand if you've got a bunch of leases that are currently accounted for as operating leases, i.e. as rents that are going to come on the balance sheet. Consider whether you're going to have to gather more information, but also consider when it comes on your balance sheet what this is going to do to your accounts. For instance, it might push you up a threshold by being bigger. It might affect how agreements that you already have in place. When you are drafting covenants or other agreements, make sure that they take into account that your accounts might look differently. Talk to your advisor, talk to your accountant about the changes, and if you want to, and you've had the chance to have a look while the consultation's still open, you can participate in the consultation yourself, or you can talk to us and get in touch, and we'll take your comments into account when we put our response in.
And I suppose last, certainly but not least, you mentioned charities being able to feed back on the consultation. How do they do that?
Well, I say they go online or they speak to us. The consultation's live. It closes on 20th of June. Final approval by the FRC is expected in August, September, when we should see the new SORP, or in practice, it might be a bit later.
Thank you, Giles. That was very useful. We've shared some ideas, and I hope it's useful to those who are watching and listening.
What I would just add is that we are planning an in-person seminar in June, so please look out for that.
Thank you, Giles, for sharing your insights. That's certainly incredibly useful, and we really do encourage everyone who's watching or listening to participate in the consultation. You will find the links of our contact details in the show notes below, and I'd like to say it's been a pleasure. Thank you very much.
Thank you.
Thank you for joining us for Larking Gowen Insights, Accountancy and Business Advice for All. Don't forget, you can find more information about today's topic and more about how our team of experts can help you in your business by visiting our website larking-gowen.co.uk. Join us again next time for another fascinating insight into the world of accounting and finance.